The road to financial independence is usually long and not easy. And along the way, there's always people trying to sell you shortcuts to riches. One of the classic get-rich-quick schemes is buying penny stocks. And so this video is about why you should never buy penny stocks. Now, some people may think it's the path to riches. Well, it is, but only for the promoters of these pump and dump schemes sold to naive and greedy people. So selling worthless stock has been going on since as early as the 1700s with the South Sea bubble. The scam doesn't really change, only the way it's marketed to people changes. In the 80s and 90s, it was marketed as newsletters and call centers like in the movie Boiler Room. Then it became online chat rooms and promotional websites masquerading as stock research sites during the internet bubble. Today, penny stocks are now pushed on YouTube, Twitter, and Instagram by people who tout themselves as experts or influencers. So what exactly is a penny stock? Well, the simple definition is those scammy stocks that trade on the over-the-counter bulletin board and the pink sheets. The broad definition is generally a stock that trades under $5. That's very misleading because there are many stocks under $5 that trade on the major US exchanges, which are the NASDAQ, the New York Stock Exchange, and the American Stock Exchange. Even though most of these under $5 stocks on these three legitimate exchanges are already a big enough gamble because they're already distressed and most likely on their way to being delisted. You see, most public companies start their life as an initial public offering or IPO on the NASDAQ or the New York Stock Exchange, and their original offering price is usually above $15 to $20, somewhere around that range. This is a range that individual investors feel is cheap enough to buy shares in, but doesn't feel too cheap as to feel like there's something wrong with the company. Now, of course, the actual selling price of a stock has nothing to do with the valuation of the company. You can't know the valuation without knowing the earnings and the shares outstanding, but that's for another discussion. As an example to this, Warren Buffett's company, Berkshire Hathaway, sells for $319,000 a share. Now, that sounds expensive, right? But really, its price to earnings ratio is about 18, which is in line with the S&P 500 stocks. So it is not very expensive, but many individual investors are not shelling out $320,000 to buy one share, and that's why they created B shares that are about $200 a share, which is still expensive for a lot of investors. And that's why people like penny stocks, because they don't have a lot of money to invest, and somehow they think that buying a stock that's really cheap for 5 cents, 1 cent, 10 cents, they can make many times more their money from buying a cheaper stock than buying an expensive stock, so to speak. Okay, so how does a stock get to $5 or even $1 where it's at risk of being delisted? Well, it's basically from their business and earnings not going well. That's how, and people start to realize that after a few earnings reports, and they sell the stock price goes lower, and it eventually gets to those kind of levels where they're at risk of being delisted. So think of an initial public offering as kind of like a baseball player who's recruited right out of school to the New York Yankees. Okay, that's like the best you can do, right? And maybe after 10 years, when he's older, he's slower, he's not doing so good, he gets injured. That's kind of like a company that's been public for a while and their business is not doing so good and their earnings are down a lot, and so after a few years their stock price goes down as well. Okay, so this baseball player eventually gets sent down to the minor leagues. Okay, so a stock that trades under $1 for a certain number of days will get delisted and sent down to the minor leagues of stocks, so to speak. That's where the over-the-counter bulletin board and pink sheets come in. They're like the Roach Motel for stocks. Stocks check in, but they don't check out. And just like that older injured baseball player who wasn't very good will never find his way back onto the Yankees, that delisted stock is most likely heading to bankruptcy and its stock price will never recover. These stocks on the downslope are not even the stocks that I'm trying to warn you about, because they're not the ones used in pump and dump schemes. These are generally legitimate stocks that are just having a hard time and their trend is down, not up. So to simplify, there's 3 types of stocks that are trade on these bulletin boards and pink sheets. And just to be clear, the bulletin boards used to be called the bulletin boards, but now they have like 3 tiers of bulletin boards plus pink sheets. It doesn't matter, it's generally all the same thing, okay? If you're buying a stock that's not on the New York Stock Exchange, the NASDAQ, or the American Stock Exchange, you're basically buying stocks on the bulletin boards and pink sheets. Okay, so the 3 types of stocks. Number 1 is these fallen stocks that I just mentioned. They're legitimate companies whose business is just doing really bad. Okay, number 2 are legitimate foreign stocks that list on the bulletin board and pink sheets to avoid hefty US listing fees. And so these are legitimate companies that in some cases, like Danone, the French food company that makes Danone yogurt, or Bridgestone, the Japanese tire manufacturer, they have high stock prices. Their stock prices could be $30, $40 or something like that. So they're not penny stocks and they're not scam stocks, but these are also not stocks that get used in the pump and dump scams because they're real companies. Number 3, these are the scam companies that I want to warn you about. And these are usually just shell companies that don't have any business or any sales. They're just listed and they're just waiting for a new stock promoter to come and buy the company and change the name and get started with their pump and dump scheme. They'll own all the stock or most of it, change the name, and away they go. So the operator of the scam will buy the company, change the name, and come up with a business that is currently the hot thing. So in the 90s, it was anything with biotech, semiconductor chips, the internet, computers, whatever. Today, it would be anything like with legal marijuana, cryptocurrency, or electric cars or something. Whatever's hot at the moment, that's what they propose or say that they're in the business of. And remember, they get people to invest because of their feelings about a hot idea and inflated promises and rumors of great things to come, like technological breakthroughs, partnerships with large companies, or rumors of being bought out by a much larger company. Now, the operator will usually control most of the shares outstanding and not sell any until all the paid promoters and social media influencers get people to buy the stock and increase the price by a large percentage. And nothing attracts buyers more and gets their emotions going like a quickly rising stock price. And that doesn't just go for penny stocks, that goes for regular stocks, that goes for housing, that goes for anything. Okay, so a stock that goes from 10 cents to $1 gets people thinking because they think they missed the first 10-time run-up, right? 10 times their money, but in their mind, they don't want to miss out, and so they think there's still room for another 10-time run-up because maybe the paid analyst said that the stock has room to grow to $25 or something like that, you know, or the rumor is Microsoft's going to buy them out or some nonsense, right? So a buying frenzy ensues, and then when it starts to fade or people start to realize that all these promises that the company keeps making, they keep making excuses on why it's not happening, or there is no technological breakthrough or no deal with Microsoft, that's when the operator starts selling his stock. He sells on the way down, not on the way up, because he does not want to slow down the momentum. And on the way down is when all the people that bought higher up start averaging down on their losing positions, because they rationalize that, hey, if I bought it at 6, I'll double down here at 3, and then when it goes to 7, I'll sell it and make money. And then they make the same rationalization as it goes down to 2 and 1.5 and 1 and 50 cents until they run out of money to buy more, or the loss just becomes so big that they have to sell because they can't stand the pain anymore. And the beauty about this scam is that the people who lose all their money are not eager to tell other people about it. So they're not going on websites warning people or, you know, saying how much I lost on penny stocks. Okay, they just keep their mouths shut and lick their wounds because they don't want to be looked at as a fool. They only like to tell people when they made money. Just like when you hear about people who brag about how much money they won in a casino, but you never hear them brag about how much they lost in that casino, right? So if you want to avoid this financial pitfall, never buy, invest, trade, day trade any penny stock, period. No matter how nice the Lambo that the stock promoter has or influencer has, you will lose money. Okay. Also, the people who sell you the secret class on how to become a millionaire trading penny stocks, they are not much better than the stock promoters. Okay, the guys who run the scams are not much better than the people who try to sell you the dream that if you take my $3,000 class, I'll teach you how to day trade penny stocks every day, and you'll make $100 or $1,000 a day from just a few $100s. Okay, so stick to investing your time, money, and effort in a real business, in real estate, or real stocks in real companies. They're not going to make you rich overnight, but they also won't make you broke like penny stocks will. So I hope you liked this video. If you did, give me a thumbs up, leave me a comment if you think penny stocks are a scam or not, and if this video has convinced you to stay away from them. And also subscribe to my channel. Thank you for watching.